Traders Live podcast.
All right. Hello, everyone. Welcome back to the Traders Live podcast, our first episode for 2024. We've got a great guest lined up today. Many of you in the Australian community know him. His name is Luke, aka Whippet. G'day, Whippet. How are you?
I'm good, Chugas. How are you?
Yeah, very good, very good. And of course, none other than my co-host Marto joining me today from a caravan of all places. Marto, how are you, mate?
Caravan of courage, mate. Yeah, no, good. Happy New Year, fellas.
Yep. No, great. Listen, for those of you who don't know Whippet, he's a very impressive trader that I've sort of had the privilege of knowing for a few years. Met him one night at a bar at Brisbane. Don't ask about that. 2023 for Whippet was great. I know that you have many things that you would like to say that you can improve on, but very impressive track record. His equity curve is a straight line to the top right-hand side of the screen. Like, your equity curve is like straighter than the lines I draw with a ruler. Like, it is very impressive. You had a 76% win rate over 2023. We're going to dive into all of that. Also, you've got an option strategy, a longer-term strategy. You do a storage container business you've had for a few years now. You do bow hunting. Like, it's going to be a great episode. So we're really looking forward to it. And thank you for coming on.
No worries. Pleasure.
Mate, before we get started, let's jump over to the trading. Our hour challenge starts. Do you have any suggestions or sort of thoughts or feelings how you're going to approach the hour?
Not really. I've been thinking long and hard about it just in the lead up to this, and I don't know, the market sort of wasn't doing much this morning and commodities didn't do much overnight either. So I'm probably just going to have to take a wild stab at the index, either short or long here in a minute, and see what happens, I guess.
Make something out of nothing, mate.
Yeah. So,
all right. Well, with that, mate, I'm going to go ahead and start your hour right about now.
Okay.
So feel free to place any trades or do anything that you want. Go for gold, mate. So, yeah, mate, while you are thinking about that, I really just want to first delve into your year in review, and then we'll probably talk about some of your trading setups with your match plays and things like that. Mm-hmm. And really learn about that. But firstly, it looks like you're going to put on a trade here. What have you got for us?
I think I'll just do 20 short on the index for now and just see whether it pops back down or whether we break this level here that it's sort of trading at and see what happens.
Yep. No, great.
Sorry, Whippet, just hide that. Just click that little hide on your screen there so we can see.
All right.
Perfect. Short. 20 short. Here we go.
You still got a bit of margin up your sleeve too, mate. Just keep an eye on that.
Great. Mate, 2023, talk to me about that. You walked away with $33,230 profit or thereabouts. If anyone wants to follow along at home, you have Twitter. You've got your year in review there. Can you talk to me just a bit about how you found 2023 as a trading year for you personally?
If I compare it to 2022, it seemed to be a bit tougher for me. It sort of started out okay the first couple of months, but I just couldn't, I don't know whether it was the conditions or what it was, but I just couldn't really, find any, not home runs, but I was struggling sort of day to day, especially through the middle of the year, just to get any runs on the board. Like I was, especially with the intraday trading, so the match scalping, which is my normal style, it was just hard to find setups. And when you did find setups, it was hard to get, any meaningful size on. I'm not a big size trader as it is, but even for me, it was just hard to get size on consistently through that middle part of the year. And I did find it very challenging. And at the end of the day, it was more a case of trying to limit the downside than maximise the upside just in the conditions that we were trading at the time. That's sort of how it felt to me. I was just trying to be patient and wait for conditions to improve and hopefully, maximise the opportunity when they did. And I found that in December, which was my best month, that was probably the best conditions I felt we'd seen all year. Even though it's usually a lower liquidity month, especially towards the back end, I just found it much easier to find good opportunities and fairly consistently through that month of December.
So, sorry, Whippet, can you just a couple of things? The profit that you made, what was that? What was that from in terms of a capital base? And then can you just give us, because you've got, I guess, 3 strategies that you follow from what you've said. So there's the match scalping, options trading, and the active portfolio kind of management side. So when you speak about, December and how it was a good month, etc., just let us know what kind of strategy worked the best, etc.
Yeah, so in terms of capital base, on my intraday stuff, I just run a 40K account, which is obviously leveraged. So, there's sort of 200K buying power there on the bigger names. And then I also have a second intraday account through a prop firm, which I have a bit more leverage with. And I only started trading that account from the middle of 2023, so I'm 6 months in on that one. So it just gives me a bit of optionality, I guess, more flexibility in terms of borrowing stuff on the intraday stuff as well. And then my sort of a longer term account, I call it long term, but it's more of a actively managed portfolio. And that sort of, that's much larger capital base than what I trade intraday, and it's a bigger profit contributor than my intraday stuff as well. So it's just something that I trade actively. I probably trade place 2 or 3 trades a day on that actively managed account. And last year, just as an example, for 2023, I traded about 75 stocks, and the driver of my trading decisions in that actual account is pretty much fundamental based. So I've just got, I maintain a list of stocks that I like fundamentally, that I'm happy to own for longer term, and then I actively trade those stocks over days, weeks, months and years within that account. And that style of trading is, when I say active, it's sort of scaling into positions and scaling out. So I take lots of trades. I took over 600 trades in that account in 2023, and my average trade size on each individual trade in that account, it's only $3,000 to $5,000, and I'll build positions up to about $50,000 is about the maximum single position size that I would like to get to in that account in terms of managing risk. And I just trade in and out of those stocks every day, basically, across, right now, I think I'm holding about 15 names in that portfolio, and it's about 50% invested on the capital base that I have available for that account at the moment. And I was more heavily invested right up to the end of October, and then we've had that massive rally, sort of 10% move from the end of October through to the end of December, and I've just been selling constantly into that rally. So I've taken a fair bit of cash off the table in that one, and looking for a pullback in the market to get back in. And then the options strategy. So I've been trading options through interactive brokers since 2015. The end of 2015, I started trading options, and I only got into options by chance. I was aware of options. I didn't know how to access them as a retail trader. The options to trade options from an Australian market perspective was very limited at that time. There wasn't many brokers that would give retail access to options trading. But the way I trade options, how I got into options to start with, I actually came across just some videos on YouTube by a fella called the Blue Collar Investor. And his name is Alan Ellman. He's a bit hard to listen to, US bloke, a bit drony, but he just got me really interested. I saw some videos on there how he trades options, and he was selling options for the premium income. So instead of buying options and speculating on a stock going up if you bought calls or going down if you bought puts, and taking the risk of time decay on that premium, owning that premium, you do the opposite. You're selling that premium. So I have a strategy where I sell puts on stocks that I'm happy to own at a certain price. So let's use ANZ Bank as an example. If ANZ was trading at $25 and I thought it was coming into a zone where I thought it was good value fundamentally, and instead of buying that stock directly, I would just go and sell puts, maybe slightly below, say at $24.50 strike price put option. I would sell a contract to open a position, and I would take that premium. That premium gets credited to my account. If ANZ finished below that strike price of that put at $24.50 or below at the date of expiration of that option, I would have the cash available in that account to take ownership of those shares. And then I would turn around and sell call options over ANZ shares at, say, $25 or higher if possible, and continue collecting monthly premiums from selling those options over those stocks that I'm happy to own. So that's sort of, in a nutshell, how I trade on that account. I'm selling premium, selling puts, taking in the premium, own the stocks if I get exercised, and then I turn around and sell calls over those stocks. I don't buy options in that account. So I'm not going long options by buying calls or buying puts. I'm short options all the time by selling calls or selling puts. I know it sounds confusing to a lot of people when we talk about options, but once you take the time to understand them, they're a pretty simple tool. And I think where a lot of people get into trouble is they use them incorrectly, and they are too aggressive in how they use them. So they're just taking on too much leverage in how they're using them, and that tends to burn a hole in your pocket pretty quickly when you get things wrong.
So I suppose, mate, the money that you got there, in case you do get exercised and have to buy the shares, that's earning credit interest as well. I guess that's part of the benefit of it.
It does. It's not very significant, but the way, I guess, you can look at options as a way of enhancing the yield of your portfolio. So if you've got a portfolio of primarily blue chip stocks, because there's only about 70 or 80 stocks on the ASX that you can actually sell options, that have options quoted over them. I'm talking about exchange traded options, not the specky end of the market where you can buy listed options. These are exchange traded options that you can buy and sell options over. There's about 70 or 80, mainly large cap stocks that you can do that on.
Whippet, do you mind just keeping that web trader tab open just for the screen sharing purposes? Perfect, thank you, mate. We've just touched on, I guess, the three ways that you approach the market. I just want to hone back in on what you do with, I guess, what you mainly put out through your Whippet account and the Samika there. Back on 2023, you had two goals there, one being size up and then two, finding some new setups. I noted that first goal, sizing up, your average trade size was about $3,000 larger this year than it was last year. Talk to me about your sizing up and how did you feel more comfortable? Was there better trading opportunities where you felt like you could size up? Yeah, can you just touch on that sizing up journey in 2023?
Yeah, so it's been a very big struggle for me from day dot is sizing. I'm a very risk averse person by nature, and I don't handle losses very well. So I'm always super cautious about putting size on anything that I'm not, 99% confident in. And I think last year was a real struggle for me in particular to size up, because the setups weren't as frequent, for one, and the liquidity seemed to be a lot lower. And in fact, I confirmed that thought today. I read the ASX monthly trading release from Australian Securities Exchange, and they showed that daily liquidity in 2023 was 17% lower on average than 2022, that's massive. That's a huge drop in liquidity. And I felt that was very noticeable, especially during the middle of the year. It was just dead and the market was just really choppy. So, yeah, I think I did size on the few decent opportunities that I saw. I felt like I did size pretty well on those this year. But in saying that, there's very few times, I can't even think of, well, I can think of probably one or two times where I've put on more than 100 grand in a trade, which is not much. Like, there's blokes out there doing 500k, $1 million positions intraday, which is, pretty significant. And they're happy to take on that risk. But for me to put on a position over 100k, it's pretty rare in this market at the moment. I'd like to do more, but it's just challenging to get that size on, especially on the match. It's just, you're going to move the price if you try and put on too much size in most names in the match, doing that sort of position size. So, but I think one of the contributors to that average position size being higher throughout the year was probably less trading intraday. So when I put trades on after the open, outside of the match, I usually size way down. So I'm talking, $5,000, $3,000 trade, even in large cap stocks. I just do really small position sizes, trying to work on an edge in that in those particular setups after the open, because historically I haven't had an edge after the open, and I found that out pretty early in my journey when I first started intraday trading. After the first couple of months, I found that I could make money on the open and I would just give it back through the day. So I quickly tried to phase out those post-match trades to try and improve my profitability in that first year. And it did work. Recognising that I had no edge there pretty quickly was a good thing for me longer term, because then I knew I could always come back. As I'm trying to discover new edges, I could always come back to my match trading, and rely on that where I had a definite edge in the market.
So you see that as your edge, Whippet?
Yeah.
So can you talk a little bit about that?
Yeah. So I look for setups, and I've got a couple of images here which I'll just pop up to help me explain what I'm looking for. So let's look at a couple I've done recently. So this is S-Center Group. So what I'm looking for in the order book is I'm looking for plenty of protection. So this is a short setup for me. You've got heaps of sellers in the book there above $2.99, $3. You got 250k wall there of protection, and then there's 100k walls at every level above that. All right. So the book is really thick on my side.
Sorry to cut in, Whippet. Is this just for slow people like me? Is this so it's center, which is obviously an S. So is this like just before 10:07 or whenever the actual share starts trading? So
this is 1 second before the open.
Okay.
So I've
before
paused
the open
it here
of that particular share,
of that particular stock in that group. So I've paused it here using Spark. So all these screenshots are out of Spark for anyone that's not familiar with that. So I've taken this trade short here in the match, knowing that I've got a super thick book above me. But when you look at the book below me, in my favour, I want the stock to go down to make money, it's a lot thinner. So you've got a lot less bids stacked in the book immediately in front of my match price, right? So I'm expecting this stock to drop from $2.99, probably down to $2.95. That would be nice. But as a scalper, I'm happy to take on a denomination this low, I'm happy to take one tick. If I get 2 ticks, that's really good. If I get 3 or 4 ticks, that's brilliant. Given that a 3-tick move in this name is a 1% move, very rare that I'm taking scalps more than 1% in size. So looking at that setup, I'm pretty confident I can get one tick minimum. And if I can get, 10,000 shares short on that particular stock or more, that's even better, without pulling that match price lower, then I'll take that trade every day of the week. And I'm super, super confident that that stock's going to go in my favour.
Okay, so this is not a stock that you already hold. This is one that you're looking at in the morning, and so where would you put your offer? Looking at that,
so I'm putting my offer at 298 or 297 in that particular example. I'm pretty sure I have my offer at 298.
Mm-hmm.
So I don't want to put my offer on the match, because often you'll get algos will come in like 2 or 3 seconds before the actual open, and they will take up all of the liquidity against 299. So there might only be, 100 shares at that 299 level that actually get filled on the match,
okay.
because the algos will come in and they'll absorb all that a few seconds before the open. So you've got to get your offer in the book in this example. I'd like to get my offer in the book a couple of minutes before the match, at a price where I'm comfortable to get filled, and I would have a cancellation ready to go on that ticker right up until the open. So I've just got to go one click to pull my order. If for any reason that price pulls down off 299 to a level that I don't want to get filled at, so even if it pulled down to 297, I don't want it to match at 297 and then wick up and fill me at 298. I don't want that to happen. I want to get filled at 299. So I put my offer in at 298, expecting it to get filled against that 299 wall. And if that's not going to happen, I'll pull my order if the price starts to pull down. Mm-hmm. So in these situations, there's so much going on in that match time. You've got 2 minutes between groups, 2 minutes and 15 seconds to make your decisions, get your orders in, and then commit to what you're going to take. So sizing, back onto that sizing question, sizing is something that's very difficult to manage well in the moment in these sort of match setups. So if because I'm watching 4 stocks in every group, so that's 20 stocks every open I've got my eyes on. So in each group I'm watching 4 stocks, and often if there's more than one setup that I'm happy to take, I don't have a lot of size on either of them, because I just don't want to carry too much risk one way or the other. So that's one of my struggles I have with sizing. I don't focus enough on an individual ticker in each group to maximise the opportunity there for the size that's available, I guess.
Mm-hmm. And that 299, mate, how do you, or 298 if you put your offer in there, how do you decide that that's fair value? I mean, if the stock closed at $3.20 yesterday or at $2.70, how does that affect? So
this particular day, so this is the 28th of December. This is the day that most of the real estate investment trusts, the A-REITs, went ex-dividend, okay? So on that morning, I noticed in a couple of the earlier groups that some of the REITs actually matched. They were going ex-dividend that day, so they should have been dropping the amount of the dividend roughly. But I noticed a couple of them actually opened flat or green. So I was like, shit, that's a bit strange on ex-dividend day that these are holding up. So S-Centre, this stock here, I think it was paying about 8-cent dividend. So it's dropped an 8-cent dividend and it's literally opening flat. So that, to me, that's a huge opportunity. And when you look at the chart next to it there, it didn't drop anywhere near the amount of the dividend. In fact, it closed up at $3 at the end of the day. Oh, no, it didn't, sorry. It closed at 296 and a half. So it did close on the low, but it fell nowhere near the amount of the dividend on that day. So to me, the catalyst was they're going ex-dividend, they're opening flat. There should be a little bit of an opportunity there for a scalp off the open if I can get in, on a flat or green open. So I took those. Another one, just as an example. So this is another Sorry.
So just with that
Wrong
center,
one.
mate, did you where were you filled, and did you take
So I was
profit there?
filled at 299 on this one, and I think
Mm.
I did get out at 297 on that trade. I got 2 ticks out of that one. And SGP, so this is another real estate trust, was in the same group opening. I also shorted this one on the match. You can see in this setup, it's got the right structure. It's got plenty of offers there, decent volume in the offers there, pretty thick up to 455. And it's pretty thin on the bid. So there's not a lot of resistance below me. There's plenty of sellers there, good volume being done on this match. But when you look at this after the open, it actually went up. So it matched at 449. That's where I got short in the match. And it went up and it wiped 450. I didn't cut it. I just sat on it thinking this is ridiculous because this was also going ex-dividend 8.5 cents, I think, on the day. So I just sat on it for a few minutes and eventually it did very, very low liquidity on that pop. There was no aggressive buying or anything at 450. And then after a few minutes, an aggressive seller just stepped in and he just marched the book down. So I think I caught this one. I was all out by 445 on this one. So, I scaled out. I normally scale out. If I've got a little bit of size on, I can scale out. So I think I took a bit off at 2 ticks down and then cut the rest at 445 on that particular trade.
If you have a good trade that's presented to you, so it's an A setup, do you obviously sizing is a constant issue for you? Do you increase your size on a good setup, or do you increase your hold time, or is it a combination of both when a really good setup presents itself?
It's a combination of both, yes. But in saying that, I still don't have very long hold times. So even though I think there might be more opportunity to hold a stock or a parcel for a longer period throughout the day, holding it, through to a midday or 11 a.m. or whatever, I often, when I'm well in profit on a good trade, I often just take it. Like I couldn't be stuffed just sitting there staring at that one trade to try and squeeze an extra couple of $100 out of it. I'd rather take the money that's there. If it's been a good trade, I'll just take it. And then I'll just go and look for other opportunities elsewhere. So, yeah, it's something I could do better.
One thing for me, Whippet, that's definitely something that I think I've learned over time is that, if you're presented with a profit very quickly, it's, I think in my experience, it's better just to take it instead of, as you say, sitting around all day in the, even if you're expecting it to go a little bit further, it's just from a mental point of view, it's better just to take the quick money.
Yeah, and I've seen good trades reverse too, and I should have grabbed the chart of this one as well, the 5-minute chart. It would have been a good example what we just spoke to, but this was my best trade this year. It was on Newmont match back on the 6th of December. So I watch Newmont most days because it's a CDI, so it's traded in the US. The main listing is in the US now. So you can calculate the Australian dollar fair value for Newmont on our market based off the US close each morning. So, if it closed at $60, if it closed at $45 US today, you're just dividing that price by the Aussie dollar, Aussie AUD USD, let's say 67 cents, and that'll give you your Aussie dollar fair value price guide for today's open, okay? So on this particular day, I can't remember where Newmont fair value was for the Australian market, but it was like $61 something, right? So it was well above where this stock ended up opening on the day. And usually with Newmont, if it matches around 1% or more away from fair value, from what I consider fair value based on the US close, I'll take a trade. And the further away from fair value that match is, the bigger the size I'll end up putting on that trade. Just because the risk reward increases. And it's the same with most dual listed names on our market. they are worth watching. It's worth doing the numbers each day, just so you're aware of what the fair value price should be as a guide. And if you see an anomaly there where, like Newmont on this particular day, is opening way off what was fair value, then there's always a trade there. So I took this match that day. I was long 1,500 shares in the match, and I wish I had been bigger. I normally start off at 500 shares in Newmont. So I had a match bid in there, 500 shares at like $60 or something. And as the price stayed where it is coming into the opening time, I chucked another 500 in there. And I thought, shit, this thing's not going to close that gap. Like, this is going to gap way below. So I put another 500 in there, and then I was in the process of trying to do another ticket. And then it had opened by that time. I didn't get any more size on. But like I said, in the heat of the moment in these trades, and to be honest, I use Iris Viewpoint. It's a dog shit platform for day traders, unfortunately. That's all we've got available at the moment. So speed of order entry with that platform is not great for someone like me who's a shit typer to start with.
How often would these names kind of open up over 1% away from fair value, do you reckon?
Well, to be honest, Newmont has done it fairly regularly since the dual listing started.
I really thought that would have been an inefficiency that obviously you're capturing, but I really thought that would have been gobbled up and there's no... Yeah, okay. No,
So,
really interesting.
Chugs, I was actually talking to Bo about this a couple of days ago that we had on our pod last time, and the only thing that I was kind of thinking of where you could, kind of capitalize on that is, if you've got some large instos that for whatever reason just need to get rid of stock at the open, for instance, because their clients have told them to, and that's where you can potentially take advantage of, that kind of.
That's exactly what's happened on this day. And the telltale sign is, look at the volume. Nearly 220,000 units are going to be executed in the match here, 216,000. So this normally on Newmont, in the match, it's going to do somewhere around 5 to 10,000, right, on a normal day, or less. Some days it's even less.
Wow.
But when you get these days where someone is selling on the open or buying on the open for that matter, you can get these huge mispricing opportunities there because, this is a very liquid stock at the end of the day, but on the open, there's not that much liquidity in the book usually. And that goes for a lot of large cap Aussie names. There's the liquidity in the book on the open can be very low. So when you get these anomalies where someone's got to sell a chunk, like happened this day with Newmont, it was just a massive opportunity. And I'd replayed this. You could have bought another 5,000 shares on that particular open before that price would have moved off 58.89.
Wow.
So there was huge liquidity there to lean on. And even above that, you've got a level here and a level here of, there are 30K orders there and there. I would have happily paid up to, if it matched up here, I would have happily bought there as well, still with decent size. But anyway, I'll show you what it looked like after it opened. So this is a minute after the open, matched at 59.02. The first trade after that was at $60.68. It was only 250 shares, but it's just a massive gap. So when you look at the previous slide I just showed you, look at the liquidity in the book on the sell side. There's your first sell. There's your first offer in the book.
Yeah, wow.
So if you're aware or you know what you're looking for in these particular plays, it's just a golden opportunity. You're going to get a wick up every time on a setup like this. It might not be a big liquidity on the wick, but you're going to get a wick up, usually up near that first offer in the book, instantly. It'll be instant.
Just need a bit of patience, don't you, to wait for those kind of opportunities and then load up.
Because the algos, after the open, the algos come in. They'll fill that gap, and that's exactly what happened with Newmont that day. the algos slowly stepped up and they just kept putting bids and bids and bids and bids up until they started to get hit. People started to sell at what they considered to be a reasonable price on that day. So I ended up getting out of this. I got a parcel out at $60.40 from memory. I got some out at $60.30, $60.15-ish. And then I held a parcel because it was still below what I thought was fair value on that day, expecting it to come back up and wipe above 60.40, but it actually traded nearly all the way back down to 59.30. So if I had have just held this thinking it was a A+ opportunity, I'm going to ride it until the price gets back up to fair value, man, I would have been kicking myself, riding it all the way back. So for me, taking profits immediately on these match scalps is something I'll always do because you just never know where that price is going to go. Yeah. And if you leave a bit on the table, so be it. If you're making good money in the meantime, you got to be happy with that,
So do you still aim for a few ticks on setups like this where there is a 1% plus gap, or do you sort of trade all the way up until that inefficiency is closed and it's traded back to where that CDI is, or are you still just playing aiming for those few ticks?
No, for this one, because the differential was so wide, I knew I would at least be able to get 100 ticks out of this one. Like it was that far below fair value. I was expecting this thing to wick straight up, to that first offer in the book. To be able to start.
I guess Whippet, from what I'm hearing, like what you're really playing here is that inefficiency in the match, right? And if you go much beyond that, if you end up holding it for the day, that's where you're just going to flip a coin whether the market's moving up or down, and that's not what you're playing for. That's not your edge, is it?
No. So you need to have a reason, I guess, or a catalyst to take a trade. Any trade, in my opinion, you've got to have a reason why you're doing it. So most of my setups are commodity based. I'm not very good at trading fresh news because I consider fresh news plays to be crowded trades, especially on the ASX. It's different in the US. They got a zillion stocks to trade and a zillion times more liquidity. But on our market, you get a couple of decent announcements a day. Every day trader and his dog's looking at that stock on the open. And it just becomes nearly impossible for me to trade something like that and without taking on more risk than I'm comfortable with. I can size down, sure, but then I might as well go and look for what I consider an easier opportunity to trade where there's less eyes on it. I can make a high probability trade, take a few ticks, and that'll do me. Like those property trusts that day. Yeah, who's trading property trusts as a day trader? No one. I'm happy to. Yeah. If I see an opportunity there or a good setup, I'll trade them every day of the week. And I traded property trusts probably. I was watching them most days in December. There just seemed to be opportunities there with interest rate speculation going up then going down. The property trusts are fairly impacted by, or they're interest rate sensitive. So it was having a big impact on what they were doing. And they just went straight up from November. They just went straight up. Some of them have moved up 30% off the bottom. And there was just a lot more opportunities in those names in December. And I was trading them pretty regularly.
It'd be interesting to see if there was any seasonality in those names, I guess, with everyone down at their local Westfields and whatnot through that period, whether that kind of played a role in a bit of demand. But mate, just quickly on the on your trade here, I know you don't really trade futures much, but what's the chart looking like for you at the moment, mate? My profit's been shrinking, so that means yours has been increasing.
I've only got tiny size on those, so my $60 profit's certainly not going to elevate me on the leaderboard. I don't think you're under threat, Mardo, with your win. But I'm sort of looking at this, and I've got BHP chart there as well, you might have noticed, just the bottom right corner. The only reason I've got BHP there is because it's the biggest name, so it tends to have a bit of an influence on the index. So I don't know if iron ore's open yet. Yep, it's just opened. I don't have the iron ore chart in front of me, but I'm hoping that it's a little bit down today and it might drag BHP down and the index with it. But yeah, I'm happy to stay short for now on this trade. Yeah, if I was watching it back here, I probably would have cut it when it popped up here. So lucky I wasn't watching the screen at that time.
What do they call that? False breakout?
Looks like it.
Has the match trade changed for you at all over the year that was? In terms of, you obviously mentioned liquidity down 17%. Did it change at all for you, or was it just sort of less opportunity there?
There was just less opportunity. It hasn't changed.
Yep.
So I've got a pinned tweet, my Whippet Twitter handle. You'll see there, I done that tweet back. It was probably a couple of years ago. Might be 18 months ago, whenever. I've been back and reread that thing a couple of times, and it just describes what I'm looking for in a match setup, how I trade. And I still do exactly the same thing today. I haven't changed a thing in that Evernote document that I've pinned in that tweet as to what I'm looking for today still. I just have a very solid routine every morning in terms of checking international markets, checking commodity price moves, checking dual listed names.
So what are you specifically looking for there, mate?
I'm just looking for big moves overnight. Was there a big move in gold? Was there a big move in oil, uranium, coal? Coal today. So if you look at Stanmore today, it was I took that trade off the match this morning. It was a nice trade. Thermal coal stocks in the US. So I used FinViz to check the US sector moves overnight. So I'll look at commodity prices in TradingView, oil and gold and coal and whatever. And if I see there was a decent move on one of those commodities, I'll confirm that with the sector move in the US via FinViz. So looking at the sector moves there, and I'm seeing what the top sector was and what the bottom sectors were, because they influence our sectors in that morning in our market as well.
So you're looking for a lot, say the coal and everything's gone up overnight. Are you then biased to the long side? Are you only looking for long match plays?
Yep, correct. Okay. Yes, I'll have a bias, but it doesn't mean I wouldn't short one if it gapped up. And I was actually looking at Whitehaven this morning for a short on the open. I didn't take it, and I'm glad I didn't take it because I would have took a loss on that trade. But I was thinking to myself, if Whitehaven gaps up, 3% or more today on the open, and there was pretty good cover in the book as well for a short, I would have took that trade. It would have been worth the risk, given that it's had a couple of big days already this week. Whereas Stanmore hasn't. Stanmore's sort of been hovering around that $4 level for the last couple of days. It hasn't followed Whitehaven higher or New Hope. And given that thermal coal was the biggest sector in the US last night, I think it had like a 5% sector move overall. And you can look at the individual names in FinViz for that sector, and you'll see they're all up 3, 4, 5%. One of them was up 6%. So that was a good lead in. And then you look at Stanmore order book this morning, there was huge bids in there, 70, 80K bids, pushing the price up about 1% on the open. I think it matched at $4.08, and that is where I had my bid. In fact, I was the first bid. I had 7,500 shares in there at $4.08, and I got filled on the match, and it just boom, 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 scaled out into a move into 4.14 straight off the open, and I made $330 or something off that trade within, a couple of minutes. So that's an example of how I found that trade. Looking at commodities, moves overnight, looking at US sector moves, knowing Stanmore, it's got a place in my heart. I hold Stanmore in my long-term stuff. I love the stock. So I was happy to take that trade today with, decent conviction, I suppose, that it was going to move up a little bit from that open. If it had gapped up 5%, I wouldn't have touched it. I wouldn't have taken it. I'm pretty disciplined in how much I'm prepared to pay on any given setup. So if at the last minute it moves up a few ticks above where I'm happy to pay, I'll just pull my order. I won't take it. Sometimes I'll leave an order in the market below the match price just for a minute or so, just to see if the stock wicks back down and fills me at a price where I'm happy to get filled. But then I'll pull that order out of the market and I'll move on to the next group and trade something else. And yeah, De Grey was the only other ticker I traded today. DEG, it was a match. You look at the setup there, it was beautiful. It was opening up 1 cent. Gold was relatively flat overnight, but our gold stocks got fairly well hammered yesterday. So I thought De Grey was good for at least 1 tick. Anyway, a decent bid popped up just before the open, so there was good protection there. I think it was $1.19 was the open price. So I had a bid in for 10,000 units at 119.5. Got filled at 119, and I sold at 120. I was the first offer in the book instantly at 120. There was no offers at 119.5, and I had an amended sell ticket ready to change that order from 120 to cut at 119. If that bid wall started to go, I would have just scratched that trade instantly. I don't fuck around waiting and praying and hoping and not watching it when I'm in them match scalps. I wanted 1 or 2 ticks out of that trade. As soon as I get that, I move on. If someone starts to wipe my protection, I'm out. Even if it rebounds later in the day, I couldn't give a shit. That's just, you've got to be very hard and fast on what you're trying to achieve here. And if it's not doing what you want it to do, you just get the fuck out straight away.
Yeah.
Move
100%.
on.
I'm going to put that as a quote on the on this video. I couldn't agree more. Hey mate, can you just quickly? I saw some of the stuff that you put up, and a lot of them seem to have gaps. So in stocks that had gaps down, and then you were playing the long side. And I'm curious because the only kind of I've got no edge at all in equities. That's why I don't trade them. But the only thing that I kind of think is that I've seen a lot of stocks that gap down and then continue to fall over the next period. So I'm interested if you're trading long, what your kind of theory is behind that.
It all depends on the book for me.
Mm-hmm.
Like, I can't think of
short term. It doesn't, really.
Yeah, like I'm literally looking at the first couple of minutes on most of those trades. I'm not buying stuff to hold for the day, or it's literally seconds, minutes, maybe 10 minutes, if you're lucky. So I'm just looking at what I think is a mispriced opportunity off the open based on all the other factors as to why that stock's moving or gapping to where it is, and based on the order book. So if a stock's gapping down 3%, so say it's gold. Say gold was down 1% overnight, GDX was down 2%. Well, I expect gold stocks to be down probably 1 or 2% that morning on our market. But if our stocks had a down day the day before already, and then they're gapping down another 3% the next morning based on those couple of factors I just mentioned, I see that as a long opportunity if the order book supports it. If I've got good protection on a long trade, and if I can scalp a few ticks, yes, that stock might trade lower later in the day, but there's a probability it's going to match lower, let's say 3% down. It's going to rip up 1% maybe before it rolls over and then continues to trade lower if gold trades lower in our session. But it's just a mispricing opportunity in that moment on the open that I'm looking to take advantage of. I don't have a bias either way. It's a visual thing for me. I can be looking at a stock, BHP, yesterday. Just had it there. I had nothing to trade in Group 1. There's just nothing going on yesterday. And now I had BHP up there because it wicks around pre-market into the open. You can get mispriced opportunities on that one pretty regularly. So its fair value based on US close was whatever. Anyway, it was gapping down. I was actually looking to take this thing long in the match. I even had a bid in the book, a minute before the open, thinking, I'll get a long scalp off this thing. It'll probably roll over, but I'll take the long. Anyway, like 10 seconds before it actually opened, it just wicked up. Like someone had just come and dumped a couple of big bids in the book, and all of a sudden it was gapping higher, 0.5% higher than the fair value close in the US. And when you looked at the setup in the book, it was just a couple of bids dragging the price up into just sell. There was just offers. There was no bids below to support the price. I knew this thing, if this opens here, it's going straight down. There's a good 10, 15 ticks in this thing, no problems at all. And I had all the tickets there ready to go because I was thinking I was going to have a long trade there, and I've always got a sell ticket ready to close that position. So I've got a ticket for each side of any trade I'm looking at ready to go before that trade even opens. Anyway, so I had the sell ticket there. I just bloody bang, popped a sell in, still had my offer in the book where I originally thought it was going to open. And yeah, it opened, wick straight down. I don't know, it took like 25 ticks or something off that within, less than a minute. It just went straight down.
Mm.
How do you go about juggling simultaneous trades? For example, there you had Centre and Stockland. They open in the same group.
Yep.
And obviously speed of execution is very important for how you trade. Do you ever struggle with having two names or being in two trades at once when you are playing for ticks?
Yeah, I do. So often, like I said, I watch 4 tickers in every group every day. Just looking for opportunities. The more stocks you've got eyes on, the more likely you are to find an opportunity, especially in a quiet market. I'll be watching 4 tickers every day. If in a hot market, and Group 4 is a good one, there's a lot of gold stocks in Group 4. So when gold has a big move, Group 4 is always busy. And I can't be watching enough stocks in Group 4 when gold is on. You've also got PLS in that group, so lithium might be on at the same time. It just becomes a crowded group for me. And I'm often stuck in multiple trades in Group 4. And it is distracting, but it's all based on the size of the opportunity and the risk that I might have on that trade. So often I'm going into those trades with fairly low risk, small size. Unless an opportunity looks really good, then I will just focus on that one ticker. I won't even give a shit about the other opportunities in that group on that day. If something lines up like Newmont did that day earlier this month, I just zone in on that stock and just trade that as best I can because the opportunity is much higher. But if there's just a bunch of stocks like gold in Group 4 and gold's had a big move and I see small opportunities in multiple names, I'll take multiple trades in that group, but it'll be with smaller size.
Yep.
And I won't be in them long. I'm just looking for a quick scalp off the open, bang, get out. If something does a bit more than I think, I might stick with it for a bit longer, but there's so many nuances in this match scalping, and I'm far from perfect at it. I can tell you now, I could do it. I can definitely improve a lot in how I do it, but it's a real personal feel thing, a visual thing. You just see stuff. Sometimes you're looking at a setup in Spark, and you just go, "Shit, this is a great opportunity. I need to bloody smoke this one." It just jumps out of the screen at you.
Yeah. Mate, we've spoken a lot about your scalping strategy, but I'm sure this isn't where you first cut your teeth in the market. How did you first get involved in the market, and what was your evolution from that beginning to where you are now, and the balance between those sort of 3 strategies that we first touched on?
So my first trade was in 2004, at the end of 2004. We just sold our first house. We'd made a bit of money on it, and I had like 20 grand available to play with. And I had no interest in markets or exposure to markets at that time. We just happened to be talking to my wife's grandfather one day, who he did like stocks, and he was invested in the stocks through stockbroker ABN AMRO Morgans. They were a full-service stockbroker. And talking to him this day, and I was just fascinated by what he was telling me. I was like, shit, that sounds good. I've got a bit of cash here. Do you think you can hook me up with your broker. So he did that. His name was Ted, this bloke, old fella. And so I set up an account, sent him the money, and he put me in 4 stocks. He put me in BHP, Telstra, Sydney Gas, and Ventricore were the 4 stocks. So I had 2 blue chips and 2 speckies. And he put $5,000 in each. And BHP ended up being like a 2-bagger for me. Telstra did nothing over that year, and Sydney Gas and Ventricore essentially both went broke. And because of the experience with Sydney Gas and Ventricore and losing that money, I got really filthy with Ted, the broker, at the time, and that was enough. And during that time, so say 12 months from when I met up with him and put that money in to when I sort of, experienced the losses and the gains, I just got hooked on the stock market. I got hooked on doing research, especially, researching Sydney Gas and Ventricore and trying to understand what these companies did that I owned a share of. And I took those losses in the end, and I was pissed off with Ted. So I said, fuck it, I can do a better job myself. I don't need Ted's advice. So I opened up a CommSec account, and at the time, it still is, brokerage was, $19.95 a trade on CommSec, where it was $65 a trade through Ted. So, his commissions were huge, but it's full service broker, you get what you pay for, I suppose. Anyway, so I ditched Ted, took all my money off him, and opened up a CommSec account, and I just, from that day onwards, I never looked back. I've just, loved the market ever since. I've been invested through the GFC, took a absolute flogging in the GFC. I think I lost about 30 grand, and I had about 50 grand in the market at the time. So, that was a decent haircut in the GFC. I actually was invested in a lot of dog shit companies when I look at it in hindsight. ABC Learning Centres, Babcock and Brown, Allco Finance, all these companies went broke in the GFC, literally shut the doors, delisted. And the common theme with a lot of them was debt. Any company that was carrying a shit ton of debt in the GFC just got absolutely steamrolled. They couldn't refinance their debt, and they just got busted. Couldn't raise equity. So that was a huge lesson, and a good one. A good one to learn at that time, because I didn't have a lot of money in the markets. It felt like a lot of money at the time, but it was a good experience to only lose 30 grand, I feel, at that time. And I was able to make that back over the years anyway since then, so that was good. But at that time, and right through that first 10 years, I was just investing more long-term, nowhere near as active as I am today. So I just buy stuff.
You have to learn a lot of the fundamentals there in terms of understanding how balance sheets, cash flow worked. And was that something that you had previous experience with, or was that something that you all a learning curve? And how did you go about learning that?
I don't have a tertiary education. I left high school in year 10, so I'm very undereducated compared to a lot of participants in the stock market. But I did just educate myself. For the last 20 years, mate, I've just been non-stop educating myself. I just love it. I think you've got to be very passionate about the market to do what we do as traders today. But, fundamentals has always been my... I've always sort of been led by fundamentals in stocks. So especially anything that I want to own for more than a day, I have to have the belief in the fundamentals of that stock to be able to do that. I just cannot own a company overnight that just doesn't make any money. It's got nothing supporting it. I've never invested in crypto for that very reason. There is no fundamental basis to own cryptocurrency, so I've never ever gone down that path, and I've never been tempted to either.
So you've spent 20 years sort of learning. Top 2 resources that you can recommend our viewers, whether it's something that you use today on a daily basis or a book or something, or a person. It can be anything. Top 2 resources.
It's a good one. I originally started learning everything off the ASX, to be honest. Like, the ASX website was where I remember initially going to try and just garner as much information as I could on investing and stuff. So that's where I got a lot of my information to start with. How I came to understand all the fundamental stuff, I just don't know. It's just a lot of reading and making mistakes and drive to understand a balance sheet. But there's a guy on YouTube who, I can't think of his. He's an Indian guy. He's a lecturer. He's got some awesome content about fundamental analysis for anyone. He hit me up on Twitter
I'll
or
ask
something.
you about it afterwards.
Yeah, and I'll find his
I'll
name.
put it in the show notes.
But he's got some brilliant content when it comes to fundamental analysis, and just hours and hours and hours of videos on balance sheets, basically, and how to understand them. And he's US-based, gives a lot of examples with US-listed companies on their balance sheets and stuff. So that would be a great resource for anyone interested in fundamentals, for sure.
And on the matching side, probably Spark and anything else you'd recommend?
Look, it took me a long time to get my head around the day trading, and I tried half-hearted attempts before this successful attempt this time round. And the biggest problem I had initially was I didn't have the right tools. So I was never aware of Spark when I first speculated trying to make day trades and just getting chopped up. Low cost brokers are, for my style of trading anyway, my commissions are a huge part of my P&L. So I need to have the best commission structure I can find. And that's been difficult in the past. It's not until recent years you've got some of these very low cost DMA, CFD brokers that offer you good commission rates where you can make this style of trading actually work. If you tried to do what I do through ComSec, you'd be losing shit tons of money.
No chance.
It's just impossible, to day trade through a platform like ComSec on that commission structure. But, not scalping anyway.
Can you do that strategy through CFDs, through synthetic CFDs? Does that work, or do you need to be DMA?
They have to be DMA, otherwise you cannot participate in the match. So, CMC markets, they offer CFDs, and IG offer CFDs, but they're not DMA. So you can only place a trade once the stock is open. So it has to match first, and then have a bid and offer in the book after the match for you to be able to take a trade with those brokers. You have to have.
So if you put a limit order in pre-open,
doesn't get filled in the match.
Doesn't get filled.
No,
okay.
It's not filled in the match.
Mm-hmm.
You've got to have those. You can only place those trades after the open. So it's just you just need that DMA access. You need to be able to see your order in the book. You need to be able to watch that book in Spark as it's opening, so you can make those decisions whether you leave that order there, whether you pull it, or what you're doing. You've got to have visibility of everything.
Mm-hmm.
Yeah. Okay. No, that's great. Thank you. That's a lot of.
But the tools are important. Definitely, if I didn't have Spark, there's no way I could do this. I could not do this just using Iris. I couldn't do it. If they took Spark away tomorrow, I'd be fucked.
Yeah.
Yep. Yeah. Okay. Interesting. And then your options exposure just came through that YouTube that you mentioned earlier, and that's something that you've grown organically through yourself thereafter?
Yep.
Yeah, gotcha.
Something I've built on over time since 2015. It's just been a steady income strategy that's worked very well for me over the years. And it's not a huge part of my trading, but I've always got money allocated to that because it's relatively consistent.
Yep. Okay. No, really good. What's the split of your scalping options and long term? Where are you getting the most return from, say, in a calendar year?
Yeah, so my long term stuff is my biggest earner for me. And I haven't mentioned how I trade long term. When I talk long term, it's very active long term. So I'll just pull up this example of Yan Coal, traded back through 2022. This one, it's just
that's very active.
Yeah. So this is an example of how I trade long term. I make a lot of trades, and so I'm scaling in and scaling out all the time. While ever I have a fundamental belief in that stock, I'll trade it like that until that changes. So once the fundamentals change, in this case, coal price started coming off, they went ex-dividend and the future earnings potential was looking lower, I just stayed out of Yancoal because the thesis had changed. It was no longer as attractive on a fundamental basis, so I didn't trade it. I started trading Stanmore. So Stanmore has been a stock I've traded super actively in my long-term account over the last year. There's a whole number of ones I've traded, but this is just an example of how I do it long-term. When I say long-term, I'm in, out, in, out, in, out. If this stock kept falling, for example, at the start there, if that price kept going down, I would have just kept adding up to a max position size of 50K and then just scale out on any rips. And it's just a strategy that works well for me. And it's a pretty consistent sort of earner. I'll be fairly heavy in cash when the market's high like it is now, just the way this strategy works. And as the market's dropping, I'm just getting deeper and deeper and deeper into positions that I fundamentally like. And just knowing that it's got the fundamentals to back them, if they ever change on that individual stock, I'll take the loss. I'll get out. And I'll tell you one I'm in right now, it's PPE. It's really been giving me a flogging. I started buying that thing at $2, where it went just before it went ex-dividend at the full year results in the middle of this year. And that thing went below $1 back at the start of December. And I was fairly heavily underwater on that stock, and I was at my max position size when it got under $1. Thankfully, it's come back, and I've been able to scale out of a few parcels up to as high as $1.30 recently to get back to a much more comfortable size. But I am still a little bit underwater on that stock at the moment. But nothing has changed on my fundamental view of that business at this point in time. And nothing changed when it was at $1 for me to say I'm out, even though I was taking a lot of heat. I was not selling that stock until I knew something had changed or had been confirmed as changed to take that loss at that level.
So do you derive an underlying price target for these longer term trades? Like, for example, Yale here, you've sort of got that 630, 640 mark. Is that a price target that you've sort of determined as fair value, or is it more whether a sector is in flavor or the company is, you've seen a really good run and you're exiting? How are you deriving where you see, I guess, a discount and then a premium in terms of that share price?
Because it's a commodity stock, am I getting close to my 1 hour? Do I have to
yeah, you're done. My bad. Yeah. Can you close that out?
Churgers, one job,
man. Sorry. I was too invested. Take it out. That's good. Perfect. My bad.
So I need to get out of this.
So if you just click the buy
20. I'll bank my...
That's $110.
$110. I'm so glad I wasn't
that's good.
Win's a win.
That's good. That's really good.
I'm pretty happy with that.
Well done.
Considering I'm not a midday trader by any stretch, just to make a profit, I'm glad I didn't embarrass myself.
Mate,
congratulations, mate.
That puts you in fourth place there. We've got, obviously, Mardo still at number... you know what? I'm just going to accidentally omit Mardo's return there. So we got Mardo number one, Churgers, Bo, yourself, and then Dan taking up the bottom at the end. So awesome. Thanks for participating in that. That's great. I think it looks like it's... If you had another 10 minutes, you'd be great.
I should have.
Hey, mate, I know we only had an hour today, but just a quick fire question. So give you $1 million and you got a year. How are you dividing it up strategy wise? What are you doing with it?
Well, I would put most of that in my longer term strategy. So that's scale in, scale out, fundamentals. Mainly because you can get a lot more size on in that strategy. I'm limited pretty much in my day trading. I can't even use the buying power I have today in my day trading. So there's no reason to allocate more capital to that strategy because I can't use what I've got available right now.
Yeah.
So I'd have to allocate it to my longer term stuff. and that's exactly what I would do. And I would still have just a small allocation, 20% or so maybe to my option strategy as well. It's just it's good to have a few things going on because you're watching the screens a lot during the day. It just keeps you active and it keeps you out of making boredom day trades as well. So I can often spend time after the open just looking for more fundamental opportunities or managing positions in that active portfolio, or I might be looking at some options plays or something like that, during the day as well. So I'm not just focusing on the day trading stuff when I shouldn't be, really.
Yep. Can you talk to us about bow hunting? What obviously we send out a pre-podcast questionnaire, and one of the questions is around your hobbies and where you spend time when you're not looking at prices going up and down. And you came back with bow hunting, which Marta and I both were like, "Oh, that's really interesting." So, mate, talk to us. What is bow hunting? What are you doing? Is it a weekend hobby?
So it's something I've done since I was a kid. I grew up in a rural area out at Narromine. Is where I grew up. I've always lived in rural areas. Sort of, my grandparents owned a farm, but I had mates at school, right from school, that were all into hunting. Started out with hunting, feral pigs with dogs. As a young fella, we'd go out every weekend and just be chasing pigs. And then I ended up getting a bow. I think it was my 16th birthday. My parents bought me a compound bow. And I had an uncle that was doing a bit of bow hunting at the time as well. So I was able to go out with him. And we would go and hunt goats in the hills just to the east of town. So that was my first experience to bow hunting. And I was hooked on that. Like, it's just, I've hunted all forms over the years, rifle hunting and everything else, but just the ability to, get in so close to an animal, which you have to do when you're bow hunting, and observe those animals in an undisturbed state, it just fascinates me. And you're competing against nature. These animals are wired, for danger 24/7. So for a human to get close to something like a deer, if you can get 10 metres away from a fallow deer in its natural state, it's a pretty surreal feeling, even though, I'm going to hunt that thing and I'm going to kill it. That's just part of the process. But it's just that experience you get. And it's such a de-stressing thing, from work and from trading and everything else you've got going on in life. When you're out in the bush, it's just, I don't know, I find it very therapeutic to go hunting, and I've made some good mates through hunting over the years. But bow hunting is my real passion. Like, I just love that. I'm actually going out west in a couple of weeks for a week with a mate hunting pigs. So I'm really looking forward to that.
Well,
what's the predominant skill set?
For an invite, mate.
The predominant skill set. Oh, look, I don't know.
Is it being able to get close to the animal? Is it being able to shoot with accuracy? All those
what's things.
The biggest?
You definitely got to be competent in your equipment. So if you're a bow hunter, you've got to be competent in the distance that you can shoot, and your confidence at that range as well. So often I'll be shooting anything out to about 30 metres. Even though, the bow's got capacity to shoot something, no problems, out to 60. I would rather get into 30 metres to be competent to take that animal humanely and place that shot accurately for an effective kill than what I would at shooting something at 60. I would only ever take a longer shot on an animal that I may have wounded. Unfortunately, that happens from time to time. I would do that to try and finish an animal off, but I'm not too bad at my sport. I hold the number 2 spot for scrub bull in Australia on the bow hunting list. I shot that last October up in Cape York. It was a monster, big Brahman scrub bull up there, and that was one of my bucket list items to do, and I was fortunate enough to be able to do that last October. So I was pretty stoked with that.
And do you eat the venison?
Yep.
Do you do the whole?
Yep.
Brilliant.
Yeah, I love it. I make sausages primarily, so often I'll take all the meat off a young sort of fallow doe, and then I'll just mince all that up, add pork fat to that, about 20% pork fat, a few bits and bobs, and I'll make sausages. And we'll eat those sausages here at home over the course of the next 6 months, And I also make jerky from time to time as well. Venison's a good meat to use for jerky because it's very lean, doesn't have a lot of fat on it, and you don't want fat in your jerky. So venison makes really good jerky. I've got a dehydrator there that I dust off from time to time, and they make a bit of jerky as well.
It's been on my bucket list for a few years, mate, to take the kids actually hunting to show them that whole kind of circle of life in terms of, stripping the beast down and eating and all the rest of it. But it's a bit hard to find someone to organise it. But anyway, maybe I've got a contact now.
Maybe.
The only other one I really quickly wanted to touch on is you said that you had recently, was it built and then sold a self-storage business?
Yeah. So, we were. So I live in Wagga. We came here in the start of 2018, and my in-laws live in Tumbarumba. Anyway, one day we were having a beer, and I was having a beer with my father-in-law up at, he's got a little block there, little scrub block, and he mentioned this block of land that was for sale, this industrial block. It was a 90 grand or 95 grand. He said it would be a great little industrial site just out of town to build some storage units because all the storage units in that town were full. So there was demand there for storage and there wasn't enough supply. Anyway, I didn't think much of it. And I thought, we'll be having this conversation for 6 months before we do something about it. It was literally a couple of weeks later. He rings me up. This was in August of that year. I remember because I was up at the Gold Coast at the time, and he goes, I've spoken to the real estate and someone else is interested in that block of land. We're going to have to act fast, basically. So I'm like, oh, shit, rightio. So we bought that block of land. It was 10 acres, 90 grand or 95 grand or whatever it was. And we had no plan beyond that. So we had no plan on how we were going to do this storage business or anything like that. Anyway, we went with shipping containers as the lowest cost option. And we had access to some containers that we could get, good quality containers. We ended up with a dozen shipping containers on that block for self-storage, and we rented them out like $36 a week or something. And the biggest battle we had was actually getting the DA approved. It took forever. The council, Snowy Valleys Council at that time, went through 3 different engineers over the course of like 6 months when we were trying to get the DA approved. So every time you'd bloody talk to them to try and make some progress, you'd be talking to a different person, starting from scratch. And anyway, I lost patience. I was ready just to fucking cut my losses. Let's just get rid of this block of land. This is never going to happen. The council is just being too difficult. But thankfully, my father-in-law was very persistent. We went halves in this. He just kept working on the council. He kept, liaising back and forth until we sort of knew exactly what we needed and we got everything done. And he had some contacts around town, which was very fortunate, that helped get things done. And we progressed. We got the DA, and literally took us, 2 months or 2 to 3 months, and we had the whole thing up and ready to go from once we got that DA approved. And it cost us a bit under 200 grand all up. So we chucked in 100 grand each. That was our budget, including the block of land, to build this thing and get it off the ground. And we knew if we could do that, we could make a reasonable return on 200 grand. And the value would be when we do come to sell it. We had roughly a 5-year plan as to when we would sort of turn this business over and realise some profits. Anyway, that come to fruition this year or mid-2023. We decided that the time was right to sell. There was demand for industrial land in town at the time. There was literally nothing. You could not buy any industrial land. So we sort of approached a fellow actually about wanting to buy it, if he wanted to buy this business and this land, and he was really keen, and he essentially made us a pretty good offer we couldn't refuse. So we pretty much tripled our money on that investment in 5 years, and it's given me a nice bit of funding, I guess, to expand our investments in the markets and things like that from the middle of last year. And I'm looking at retiring from the workforce in 6 months' time. So August this year, I'm going to pull the pin. I've been in the same role for over 26 years now. And I've sort of, although I enjoy what I do, I've sort of had enough. I'm so passionate about trading now, and that's all I want to do. So that's what I'm going to do.
Great. Well
Good.
done, mate.
That's great. Where can people go if they want to reach out to you, chat to you, find any of the trades that we sort of touched on or results and everything like that? Where can people go?
Twitter's probably the best place. I'm very active on there, as you probably know. So yeah, my Whippet handle is trade@trade4a_living, and it's trade 4a_living with no G, just LIVIN. And I've got another handle which is option_premium, and that's where I post more charts on stocks that I'm trading in my active portfolio, and the odd options sort of shout out in there as well. So yeah,
Great.
That's probably the best place to find me.
Well, Whippet, thank you so much for coming on the Traders Live podcast. I think all of our viewers have got a lot out of today's session, especially on the strategy side and really getting into the nuts and bolts of that. So thank you for sharing all of that. If anyone out there did really enjoy that, make sure you subscribe, leave a like and comment as to who we should find and chat to next. But Whippet, we are going to have to get you on again sometime, because I feel like there's two other strategies that we're going to need to sort of delve into at some stage. But yeah, really appreciate your time, mate. Thank you.
No worries. Thanks for
Thanks,
having me,
Whippet.
guys.
Cheers, buddy.
All right.